Hi guys, it's Stock Curry, and the stock market was massively green on Tuesday after banking stocks recovered, but there are two bullets the market's going to have to dodge tomorrow if it wants to maintain this rally. I'm going to tell you what to watch out for, so let's get into it. The Dow closed more than 300 points higher and snapped a 5-day losing streak as bank shares rebounded. The Dow was up over 1%, the S&P was up 1.6%, the Nasdaq was up over 2%, the Russell was up almost 2%, and the VIX fell over 10%. Part of the reason for the stock market rally is because the CPI, or Consumer Price Index, came in at a 0.4% month-over-month increase, which was in line with expectations, and CPI was up 6% year-over-year. Even though CPI posted a month-over-month steady number, it was a year-over-year decline, which was really good news for the markets. That's actually the smallest annual gain since September of 2021. Unfortunately, we're not in the all clear because U.S. inflation is cooling just as the Fed confronts bank failures. And one of the biggest things that rose in the stock market on Tuesday were the regional banks. They followed a massive rally following Monday's rout. Unfortunately, the rally was cut off as bank stocks pared a lot of their gains after Moody's cut their outlook on U.S. banking system to negative, citing a rapidly deteriorating operating environment. The downgrade followed action late Monday when Moody's warned it either was downgrading or placing on review for downgrade 7 individual institutions. These moves are important because they could impact credit ratings and borrowing costs for the banking sector. It should also be noted that it was ultimately a downgrade that brought down Silicon Valley Bank. So if Moody's downgrades other stocks, you can expect those banking stocks to drop as well, and possibly the entire banking sector over fears of more bank runs and more banks going out of business. Moody's on Monday downgraded Signature Bank and said it would remove all ratings, but more importantly, it placed the following institutions under review for potential downgrades. Those banks include First Republic, Intrust Financial, UMB, Zions Bank Corp, Western Alliance, and Comerica. And with 5 of those being publicly traded, it could bring down the entire banking sector if Moody's goes through with their downgrades. One of the reasons for the downgrade is Moody's said it expects the Fed to continue hiking interest rates as it fights inflation, and Moody's said it expects the U.S. economy to fall into recession later this year. Now, despite the downgrade from Moody's, most banks ended the day in the green, and I did buy more bank stocks on Tuesday. I know this is getting a little bit riskier now because even though the federal government has come out and said they will essentially provide unlimited funding to the banks in order to keep them in business, unfortunately, a downgrade from Moody's could still cause banking stocks to go down. So this is the first of the major bullets that the market is going to have to dodge on Wednesday in order for the rally to sustain itself. If Moody's does in fact go through and downgrade any of the banks, it will cause those bank stocks to fall, and it could bring the whole market down with it. Banks rushed to ensure investors that everything was fine on Tuesday. Charles Schwab, CEO, said the firm is seeing significant inflows and that he bought the stock on Tuesday. Charles Schwab CEO Walt Bettinger revealed that he bought 50,000 shares of Charles Schwab Tuesday morning in his personal account. There's an old saying on Wall Street that there's 1,000 reasons for someone to sell, but there's only one reason for an insider to buy, and that's because they think the stock is going to go up. It shows that the CEO of Charles Schwab is very confident that his stock is going up, and I gained a lot of confidence to buy bank stocks today as a result of that as well. First Republic shares rose more than 20% in a volatile trading session as regional bank stocks tried to rebound. First Republic ended the day with a 27.8% gain after climbing more than 60% earlier in the session prior to Moody's downgrading the banking sector. PacWest was up nearly 34% after following a similar trajectory to First Republic, and Charles Schwab ended the day up 9%. However, the S&P Regional Banking ETF, KRE, rose just 2% as other regional banks struggled to hold on to their gains. By the way, the stock that I bought on Tuesday was FRC. I know this is very risky, very, very risky, since Moody's has already said they might downgrade them. However, I'm willing to take that risk given the fact that they've already shored up their balance sheet and they have a massive loan available to them from JP Morgan Chase as well as the FDIC. So I'm not that concerned about First Republic going out of business. I understand I might have to be holding those shares for some weeks or months before they rebound, but I do feel confident in FRC after they received that loan on Sunday night. Now, it's important to remember that it's not just the banks that are in trouble. The technology sector continues to suffer as well. Apple is reportedly delaying some employee bonuses as the company cuts costs. Apple is also closely watching travel budgets and cutting back on their hiring. Meanwhile, Meta is laying off 10,000 more workers after they already laid off 11,000 employees in November. And AMC shares plunged on Tuesday as investors approved a reverse stock split and an APE share conversion. AMC investors approved the conversion of preferred APE shares into common company shares. This is going to have the effect of diluting AMC shares. And on the balance sheet, it will actually be a good thing, though, because it will help AMC reduce its debt load through stock sales and an increased share base. But it is bad for shareholders because it dilutes their value. AMC shares were down over 15% on the day, closing at $4.64. Meanwhile, despite more bad news for crypto, including Binance halting UK customer deposits and withdrawals, Bitcoin continued to rise and neared 26,000 on Tuesday. As I've been saying, the fundamentals for cryptocurrencies continue to get worse and worse and worse, with multiple banks going out of business, with exchanges shutting down, with a whole lot of cryptocurrency getting locked up because people have their crypto at exchanges instead of hardware wallets. And the entire outlook for cryptocurrency is getting worse and worse and worse. Yet, cryptocurrency continues to rise because it is currently seen as a safe haven from a declining dollar and as an alternative to the banking sector, someplace safer than a bank to hold your money. And that is why crypto is currently rising despite this huge amount of fundamental negativity that is just being thrown at cryptocurrencies right now. So I have two thoughts on this. The first one is obviously keep your cryptocurrency on a hardware wallet. Do not keep your cryptocurrency at an exchange, because if your exchange like Binance or FTX or whoever goes out of business, then you're going to lose your cryptocurrency. So always keep your cryptocurrency on a hardware wallet like a Tether or a Ledger or something like that, so that you don't lose your cryptocurrency if your exchange goes out of business. I personally use a Ledger. If you want to read up about the Ledger and learn more about it, you can visit my resource page at stockcurry.vip/resources. That's stockcurry.vip/resources. And my second thought on cryptocurrencies is that while it is running up right now as people rush to throw their money into treasuries and other bonds, as well as cryptocurrencies as a safe haven from the banks, the fact is that once the banks recover, and they will recover, this is not 2008, the Federal Reserve is throwing anything and everything at these banks to keep them in business. They're not going to fail like they did in 2008. So as they recover and as fears surrounding the banking sector continue to go down, this is eventually going to cause people to put their money back into the banking sector, meaning money is going to flow back out of treasuries, treasury prices are going to go down, yields are going to go up, and more importantly, money is going to flow out of cryptocurrencies, and that is going to cause crypto to go down. Now, I don't know when that's going to happen, but sometime soon, the fear will start to subside and money will start flowing out of crypto and back into the banking sector. So I would recommend that if you have any cryptocurrencies, you get them onto a hardware wallet, or you consider selling them and taking profits, because I do think that cryptocurrencies are going to fall here sometime in the next week or two as fear starts to go down. Now let's talk about the second bullet that the market is going to have to dodge on Wednesday, and that is PPI, or the Producer Price Index. And what's going to make this a lot more difficult is the fact that PPI is actually expected to go down. So even though CPI was expected to stay flat, PPI is expected to go down, and that is going to be a very tough number to beat. It is more likely that PPI would go higher than expectations. So those are the two bullets that the market's going to have to dodge on Wednesday, are Moody downgrades and the PPI, or Producer Price Index, which more than likely will come in higher than expected. If the market can overcome those two things, then we might see stocks continue to go up. Otherwise, we could easily see stocks sell off a little bit after Tuesday's massive rally. Of course, all of this is leading up to the Fed meeting next week as people ponder just how much the Fed is going to raise interest rates by next week. As of Tuesday's close, the market was pricing in a 78% chance of a 25 basis point rate hike and a 22% chance of a 0% rate hike, or in other words, a 22% chance of the Fed pausing. And it's also important to understand that there are other factors that could cause the market to go down if things escalate. A Russian jet collided with a U.S. drone over the Black Sea on Tuesday. Now, this ended up being a fairly nothing moment as far as the U.S. is concerned, but this could lead to increased escalations in the war in Ukraine if things start to spiral out of control. So just be aware that even though the market was extremely bullish on Tuesday and actually finished very bullish as well, indicating that it really wants to rally again on Wednesday, there are a lot of things that could still cause the market to go down. So I definitely would say have a lot of caution during this time. I wouldn't go too heavy into any one position. There are a lot of risks in this market. As it stands right now, technical analysis does not matter. We remain in a news-driven market, and we will probably remain in a news-driven market through the Fed meeting on Wednesday of next week. I don't expect that news-driven market cycle to end for another week. Now, starting Thursday of next week, we can start taking a look at the technicals once again and making some plays off of that. And after all of the news is kind of out of the way, then the uncertainty will also be out of the way, and it'll be a lot easier to start making some trades. Now, in some really good news for you guys, I told you yesterday that I made about $20,000 on those VIX call options. I sold all of my bearish positions on Monday. I bought a bunch of banking stocks on Monday, and I was up about another $1,000 on Tuesday. If you want to know how I make money and all the trades I make and how I trade options and how we make money in the market like this, then I invite you to come join the We Profit Day and Night coaching program. And I wanted to let you know we are launching a special for alumni and former students. You're going to love this. The masterminds are at a massive 40% discount. Now, this only applies to current mastermind students or former mastermind students. And if you've never joined a mastermind, don't worry, I'm not leaving you out either. If you are a former VIP Discord member, I am now offering and inviting you to join the We Profit Day and Night coaching program at a huge discount. I'm taking 20% off of the We Profit Day and Night coaching program for former VIP Discord members. If you're interested in getting back in and making money with us, then schedule a call with the onboarding specialist at weprofitdayandnight.com, and I will see you in there soon. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what's going on as well. And don't forget to hit the like button and subscribe. And if you want to know more about what's going on with all these bank stocks and all the volatility and everything, I explained it in much greater detail in my video yesterday, which you can watch right here.